Lesson 9. The Anatomy of a DFTS Trade. In this video, I want to describe the anatomy of a trade using the ES, one of the most popular instruments our members like to trade. Since my plan today is to scalp, I am using a combination of a 5 and a 25-minute time frame. On my 25-minute chart, which will be the reference frame, I will place a 30-weighted moving average. I like to displace my moving average by 2. That way, it makes it easier for me to see the changes in the slope. In order to change the displacement, just double-click on your 30-weighted moving average, go to Visual, and under Displacement, change it to 2. Now I'm going to go through this trade step by step as in our recipe. The first step, look at your larger time frame and determine the trend and direction with the help of the moving average. So here we are, it's 8 in the morning. My trend identification process has begun looking at the reference frame. In this case, the reference frame is the 25-minute chart. And as you can see, the 30-period moving average has been rather flat for some time. This could be good because at some point, the trend will start again. Using everything I've learned about trends, I see on the left side of the chart a very sharp move down. The typical move Aldo always describes as elegant, slim, and fast. And this move is followed by a slow, choppy, sloppy period. Thereafter, prices fell again quickly, and we were once again followed by another corrective period characterized by a slow, choppy, sloppy, overlapping move. That's where I was at the moment. No clear trend because the moving average is flat, so I needed to wait until it turned up or down, and there was a close above or below it in the same direction. That would be my green light to move my attention to the trigger chart, which in this case will be my 5 minutes with the top and SAR indicator on it. And just a note about setting the parameters here for the SAR. You will want to set the parameter Calculate on bar close to false. Now back to our chart. I must admit, however, that the fact that the quick thin moves have been to the downside and the slow and overlapping moves to the upside has predisposed me to think that the trend is down in this time frame. And the second tenet of technical analysis teaches us that trends tend to persist. So with that in mind, my thought was that the next meaningful move was likely going to be to the downside. But that was just my thought process. Prices were slow and overlapped every time they attempted to move up, but showed ease when falling. So the path of least resistance appeared to be to the downside, at least up to this point. That's typical of a downtrend, so with my analysis, I formed an opinion. But that's not enough. Now I needed an indicator. In this case, the 30-weighted moving average on the reference frame to confirm my opinion. Even though I had an opinion of the direction of the trend, I needed to be open to the possibility of a trend change. So despite all evidence pointing to the trend is down, I did not have a green light to move down to my trigger chart yet. And let's be honest, the DFTS does not call for my opinion, but for a close above an upslope 30-period moving average or a close below a downslope 30-period moving average. So right or wrong in my opinion, I needed to first wait for the moving average to turn up or down. And secondly, prices had to close in the same direction of the slope of the moving average before I could even start considering a trade. On this chart, you see prices trying to go higher and even managing to close above the moving average. But the slope of the moving average was still flat or down. So our trend indication process required more time. Sometimes the preparation for a trade opportunity takes longer than we would want, and sometimes it doesn't happen at all during our trading session. So patience is one of the prerequisites of trading success. The second step is to switch your attention to your trigger chart and wait for a rally on this time frame. It is now past 11 a.m. For over 3 hours, I didn't have the green light to move to my lower time frame and look for a trade signal. While I had a bias of direction, for over 3 hours I had no confirmation from the reference frame. Now at this time, I could see 2 closes below the moving average, and the slope appeared to be turning down. So I was finally able to move to my 5-minute chart and look for sell signals. So this is my 5-minute chart. You can see that the sell signal was right there. We have a red arrow, a red moving average, and the bars had already turned red as well. Notice that the SAR had just moved from below the bars to above the bar, so I had a valid sell signal right there. But remember, step 2 demands that we wait for a rally on this time frame. So in as tempted as I felt to sell the market right there, especially after having waited for 3 hours for the opportunity, I had to wait for a possible rally and another sell signal. So here, I want to take a moment to point out the psychological aspect that is implied in the process. So far, I've waited for 3 hours just to be allowed to start looking for sell opportunities. And now that the sell opportunity was right in front of me, I still had to wait longer to fulfill all the ingredients and steps of our trading recipe. The good news is that at least I knew that I was only going to be taking the signals short. I was to ignore all the buy signals I saw in this time frame. That step, in and of itself, eliminates half of the potential bad trades. The point is that now, I had to wait even longer to see if I would get the necessary rally, or if this is one of those trades we wait for hours and are still not able to take. Or even that it could just keep plummeting down and never give me an opportunity to enter. So that, my friends, can be frustrating, and it happens, so be prepared. Well, after 20 minutes or so, I saw the green arrow and the bars also turned green. That was encouraging. It implied that I would get my chance to sell if I was patient enough. So the third step of our 5-step recipe? Take your first sell signal after the rally. Only a few more minutes passed before I got a valid sell signal. The bars turned red and the red arrow appeared. Now, while prices were rallying, the moving average had stayed red and the SAR had also stayed above the bars. So, in fact, all I needed were that the bars turned red and the red arrow to complete a valid sell signal. Because the DFTS is so reliable, I typically use 3 contracts as a trade unit. That allows me the possibility to take profits quickly and reduce my risk in a more effective way while still allowing me to take advantage of larger moves when they do occur. So I placed my order at 24.71 with 3 contracts. However, do not trade with a size above your level of confidence or one that is right for your capital. Doing so could damage your psychology and influence negatively your trading decisions. Our money management basic rule is this: use 1 contract for every $10,000 in your account. That means that if you only have a $10,000 account, no matter how reliable the DFTS is, you must trade 1 contract until you reach $20,000. At that point, you may use 2 contracts until you reach $30,000. And above $30,000, it's really up to your risk tolerance to continue adding a contract for every $10,000 you add to your trading capital. For the 4th step, place your stop at the level of the SAR and trail it as the SAR moves. At the time I placed my order, the SAR was at 24.97, so I placed my stop there. I want you to notice that the distance between the dots of the SAR is increasing. The first 2 dots are closer together, and then they begin to separate more. That's a good sign that the trend is gaining momentum. Just a few more minutes were needed for prices to continue falling. Using the DFTS, it is rare when you have to see prices going against your direction for too long. So within a few minutes, the SAR moved 6 handles lower, and I trailed my stop with it all the way to 24.91.50. I was about 1,300 positive. At that point, I would normally take some profits and leave a runner running. That's the way we eliminate the risk of the trade at once. But the truth is that I wanted to exploit this trade to the maximum for this video. Besides, trade management should be another lesson for a different video. So as tempted as I was to take money here, I didn't. A few minutes later, prices continued falling. I was now at $3,600 into the money. It had been a really good trade, so every part of me wanted to exit it and take the money and run to the bank, but there are a few observations I want you to notice. First, notice that 2 green arrows appeared while prices were still falling. Thank goodness for the top indicator telling me, don't worry, until the bars and the moving average turn green, you're okay. Also, look at the distance between the SAR dots. Do you see how the SAR is increasing even more than it had done in the beginning when I first pointed it out? Again, that is a sign that the trade is still gaining more momentum, so it would have really been silly for me to exit it now. My stop was still trailing the SAR, and it was almost at break even. Besides, I'm following our 5-step recipe for a successful trade, and according to the recipe, I should exit when the SAR changes from above the bar to below the bar, and that had not happened yet, and it didn't look as if it was about to happen either. Why, you ask? Because the distance between the SAR and the bar is large. You can keep in mind that before the SAR switches from above to below or from below to above, it typically will get very close to the extreme of the bar, so that's a good thing to keep in mind. Now, after seeing 5,000 in my trade, it retraced again, making me very uncomfortable. However, I stuck to the plan and I continued trailing my stop with the SAR, and at this point, I was able to lower my stop to 24.6325. That means that my stop was now below my original entry, and no matter what, I had profits locked into this trade. The SAR continued increasing the distance between the dots, and that led me to believe that lower prices were still in the cards. Okay, I am now going to be stopped out. You can see how the SAR is now at 24.5825. So I lowered my stop to that level and was expecting to be out of the trade momentarily. And that leads us to our 5th and final step of our 5-step recipe. Exit as soon as the SAR changes from above the bar to below the bar. Here you can see I was stopped out at 24.5825 with 1,912.50 in profits. While that is a very good trade, keep in mind that at some point I had 5,000 in the trade. That can be very disappointing to some traders, but you have to understand that with the DFTS, you will never buy the bottom or sell the top. But we very well may be able to take a nice chunk of profit in the middle with more safety and consistency. In this case, I was stopped out before the SAR changed from above the bar to below the bar and had almost 2,000 in profit. Turning my attention now back to the reference frame, I saw that prices were still below the moving average, which was also pointing down. So that meant that this rally in the 5-minute chart that stopped me out could just be another opportunity to go short. I would only need to wait for top and SAR to give me the signal to sell again. Only a few minutes later, top gave me another sell signal. But notice that the SAR was still below the bars, so I couldn't sell. I had to wait longer. This one was easier psychologically because I had already taken a profitable trade and I didn't have to wait 3 hours for the setup. Once again, I got the top sell signal. The bars turned red, the moving average was also red, and I had a red arrow. Additionally, this time the SAR had moved above the bar. So I immediately placed my sell order at 24.4450, with the stop at the level of the SAR at 24.6175. My order was immediately filled. The trade didn't take too long before moving in my direction. So I moved the stop down to 24.5575, reducing my risk substantially. I was still planning to squeeze this trade for as much as possible for this example, so I took no profits. Then a large bar took away all my profits, testing my confidence. However, I continued trailing the stop at the level of the SAR and followed the rules for our DFTS. My risk was now only 5 points, and 2 new red arrows appeared. Given the fact that all the signals still called for lower prices, this could be taken as an opportunity to add to a winner. That should probably be another lesson in trading management. However, I didn't add here because I still had a 5-point risk and did not want to potentially destroy a good trading day. Had my trade been risk-free at this point, I would have added another unit. Once again, I see more than 3,500 in potential profits. And once again, I see the parabolic dots becoming farther apart. That gives me the impression that the momentum was increasing to the downside and I'd be able to squeeze more profits. Besides, the SAR is still very far from the bar, so I didn't think I would be stopped out. My stop is now below my entry and my trade was risk-free. The SAR was now very close to the high of the bar. There was a strong possibility I was going to be stopped out soon, but my stop was already at 24.2825, locking in substantial profits. I was able to lower the stop further and lock in even more profits. However, the SAR was now so close to the bars that it was only a matter of minutes before it would take me out. I could lower my stop now to 24.1975 and was stopped out with 5,550 in profits. So these 2 trade examples produced over 7,000 in profits in one day of trading. Yes, I had to wait more than 3 hours to get the right conditions to trade. But it goes to show you that following the dual frame top strategy to the T could be extremely profitable when the markets are trending. But these examples not only showed you how to apply the DFTS, they also showed you how to read and interpret better the SAR and the top signals. I'm going to finish this video with an important note. I do not want you to think that by trading with our DFTS strategy, you will never have losses. Indeed, you will have more winners than losers if you respect the 5-step recipe. And in all likelihood, your winners will be a lot bigger than your losers. But keep in mind that the success of a trading plan depends on many variables, many of which we covered in this course. Entries, target, protective stop, trailing stop, multiple units, adding to a trade, and so on. There are multiple variables that we could not cover in this course, such as discipline, patience, stress, decision-making, self-confidence. These are all issues that we cover in detail in our psychology courses. As long as you're impeccable in your ability to follow the DFTS recipe, you shall make money. As long as the DFTS process becomes second nature to you, and you understand that your success using the top indicators depends greatly in taking only the signals that follow the direction of a larger time frame, you shall make money. What you have learned in this course is a trade setup that is completely objective, clear, easy to follow, and logical. It guarantees a high probability, low risk in any market you choose and in any time frame. Remember, the trade setup is determined by the higher time frame. The trade execution depends on top in the lower time frame. Your reference frame determines the conditions that must be met before you consider a trade using top. If you use top signals in both directions without the filters given by the larger time frame, you will dramatically reduce your chances of winning and trading for a living. Top offers you the real chance to become a professional trader, or at the very least, earning a second income from trading impeccably. I hope you've learned a lot in this course and got plenty of inspiration with these 2 trades. I urge you to review all the previous videos in this course and commit to memory the 5-step recipe of our DFTS trades. That by itself will make the difference between losing and winning. Our educational section will show you a lot more about technical analysis, and in the future, you will be able to use the DFTS as your basic setup upon which you add multiple variations using trend lines, bar patterns, Ichimoku clouds, and whatever works for you. As usual, feel free to contact us with your questions, reviews, trades, and most importantly, with your successful trades and stories. We wish you the very best in your journey to become a top trader. and we thank you for letting us be a part of your success.